Hi, it's Michael Farr from Farr, Miller and Washington. It is the first full week of April here in Washington and in the markets. The cherry blossoms are out, and I'm particularly cheerful today because one of my top 10 stocks for 2015, Perrigo, has been suggested as a buyout candidate by Mylan Labs. The stock was up big today. And so I always like that when it looks like things may move even higher. The stock was up big. Perrigo looks like a pretty good stock pick so far for 2015. Market commentary came out today from Farr, Miller in Washington, in which I discussed the Federal Reserve. Markets were watching the Federal Reserve's release of minutes today. And markets were once again trying to figure out whether they should go higher or whether they should go lower based on what the Fed said. And maybe I've been doing this too long or I'm too old-fashioned, but I long for the days when we used to look for company fundamentals. Did they earn more money? Is the economy expanding? Will basically corporate America sell more goods and services and grow their bottom lines, and that would determine value in the stock market? Now we don't do that. Now we watch what the Fed says. The Fed has a dual mandate. A lot of the Fed presidents think that that's too broad. One of the mandates is for price stability, i.e. inflation. The other is employment. Employment is a very hard mandate for the Fed. They have monetary policy. How do you control employment with monetary policy? It's a very thorny question. But the Fed now, in their minutes and in their conversations and in the speeches of the various Fed presidents, talks about the stock market and real estate and income inequality, commodity prices, and the value of the dollar. I mean, when did this get to be the Fed's issue? I promised in the written market commentary that I'd discuss the greatest risk. The greatest risk is to the full faith and credit, to the confidence in the Federal Reserve itself. Not only the confidence that we, as Americans and economy, have in our central bank, but that world investors and world governments and world currencies and economies have in the Federal Reserve Bank of the United States. If they overpromise and fail to deliver and somehow erode that trust, our economy is at great risk, and probably the greatest risk any of us can imagine. Do you remember back to 2009 when the stock market made a low on March 9th? It was around 6,700 on the Dow. Things were really bleak. But things started to turn for stocks, particularly strongly into April. Why? Because the Federal Reserve instituted these stress tests for the banks. They didn't tell us the criteria for the stress test. They told us they'd take 30 days. They told us that 85% of all banks passed the stress test satisfactorily and were in good shape, and they offered some remedial action for some others, and they said very few were in real problem areas. What really happened at that time? What really happened was the Federal Reserve took the good faith and credit and confidence in the central bank and transferred it back into the banking system, so that everybody looked up and said, oh, it's okay to go back in the water again because the Fed said so. If the Fed at some point is unable to solve the issues of the day, if that waving of their magic wand no longer works, we've got trouble right here in River City. I think it's time for the Fed to get out of the way, let the chips fall. We live in a free market economy. We need to let the free markets work. We cannot be overly dependent on the Fed, and the more we think that they can do, the more likely it is that they may disappoint, and those results could be catastrophic. Don't feel bad when the Fed gets out of the way. It's time. Investing has been okay so far for the year. Very volatile. We write about that in our quarterly newsletter. We're going to talk about it, too, in our review of the first quarter of 2015 that's going to be available to clients coming up with passwords, etc. online. If you need any help, if we can give you any advice or assistance, give us a call. We're happy to help in Washington, D.C. I'm Michael Farr. Thanks for tuning in.